Donald Trump, he dropped a stock today that gained nearly 60%. 60% in a single day. So is this a company you should add to your watch list? What are the pros? What are the cons? And everything in between. Let's go ahead and break it down. All right, I did all the research so you don't have to. And I pulled together 5 really important facts that I think can help you to make an investing decision here. So I'm taking all the politics out of it. I am looking at the numbers, okay? That is what I care most about, and that is what is going to help us determine whether this is a stock you should own or whether this is a stock you should avoid. So the first thing is this, and I think this is extremely important. Once I get down the list, these things increase in importance as well. So the first thing is, this is a blank check company, also known as a special purpose acquisition company. We knew these as SPACs. Now, these were extremely popular back in 2021 and 2020. There were a lot of companies that did this whole SPAC thing and did not go well. What is the basic definition of a SPAC? Basically, you form a company and its only purpose is to acquire another company to make it go public. That's it. They don't go through the regular IPO process like Reddit did just last week. Now, the benefits of that is they get to go public very quickly. You get to have a lower standard in terms of letting your investors know what the risk and the pros and the cons are. And it's a lot less expensive for the people who own the company. For me and you, it doesn't really matter, but the company is out there and it's public, and you do absolutely want to know that because, again, they don't have to report all the same things that a Reddit and some of these other companies had to report. So the first thing is the SPAC. Now, this is a merger of the Trump Media Digital Group. Okay, he has his own media and digital team, and then it is the Digital World Acquisition Group. So you're putting those two things together, and that is how you get the stock that you are seeing today. Now, primarily, what do? They own Truth Social. It is a social platform run basically by the former president and his team. It is a competitor to Twitter, and I was going to say Tesla, but a competitor to Twitter, Facebook, TikTok, so on and so forth. What is the next thing you should absolutely know? All right, so it was up at one point 59% and came down and closed around 17%. That is volatility, ladies and gentlemen. That is what I want you to be aware of. Can you make money on a company like this? At times, yes. But imagine you look up, you get your app, you buy it when it's up 59%, and then it drops from there, right? It drops for you, but if you bought it in the morning, you were still up 17%. You really don't normally see that type of volatility, or you don't want to see that type of volatility in your portfolio, because 1 minute or 1 second can really determine whether you make money or not, which is extremely difficult for you to do on a predictable and consistent basis. So perhaps a better strategy, if you are looking to get this company, is to wait things out, wait until the hype dies down, and then see what the stock looks like and consider getting it then if this is a company you want to buy. However, let's go ahead and continue with our list with number 3, the financials. Okay, take who owns it out of it, take the election out of it, take all the celebrity and stuff out of it. Here's what you need to know from a financial perspective, because remember, behind every stock is a business, right? That is what we care about. Is that business making more money or not? Because that is what is eventually going to translate into whether the stock is going to be good. Remember what we had said about AMC and how AMC has performed. Remember what we said about GameStop and how GameStop has performed. At the end of the day, you got to make money. If you're not making money, the stock is eventually going to fall apart. So here's the thing. The company lost $49 million in the first 9 months of last year. Okay, you lost $49 million. The revenue that you brought in, how much money did you actually bring in? Just $3.7 million. That was it. Less than $4 million is what the company actually made, and they had to pay $37.7 million in interest. $37.7 million in interest, and obviously you know the interest rates are high and they may continue going higher at least through the halfway point of this year. That ain't making money. Okay, now the most concerning thing when it comes to financial piece is this. You got a company, I want you to really think with me as we do this, okay? You have a company that lost $49 million, you only made about $4 million. How much do you think that company is worth? Okay, just think about that. How much do you think a company like that would be worth? You lose 49, you're only making about $4 million a year. You are paying $37.7 million in interest. How much is this company worth? Well, according to the stock right now, based on where the stock price is, its market cap, its value is $8 billion. That doesn't make sense. Okay, a company that is currently losing money only makes $4 million with an M. Okay, it only makes $4 million, but it's worth $8 billion. That gap between what you actually made and what the company is worth, those two things don't add up. Okay, so that is the biggest concern here. One of the biggest concerns from a financial perspective. When we talk about a price to sales ratio or how much a company makes versus what its market cap should be, that gap, $4 million to $8 billion, is not something you ever see in any normal company. So that is something I would be alarmed about if I'm somebody who is even focused on the finances. But there are two other things that have red flags. This might be, a red flag, but let's say this other flag is, oof, okay, this is huge. All right, before we get to that though, make sure you sign up. I have a free ebook, you can call it ebook, a pamphlet if you will, on how you can start investing in 20 minutes. You might be thinking, hey, I want to start investing, but I don't know where to start. Well, I can help you start in 20 minutes or less. The link is down here, totally free. I'll walk you through the entire investing process. You can go back and read over the ebook as many times as you need. It's 100% free. Go ahead and click the link and download. All right, so the two biggest red flags. All right, so as you probably know, if you've been following any part of the news, Trump is in a bunch of legal disputes, and a lot of these cost some money. So there was a case in New York where he owed close to $450 million, and that was then reduced, the bond that he has to pay immediately, down to about $175 million. What does this have to do with the stock? Well, remember, if you need cash, someone like Donald Trump is mostly illiquid, meaning a lot of his money is his net worth, is tied up in a lot of buildings. You'd have to sell that building to get the cash to pay off a lot of these things, which is why it was reduced to begin with. Well, if you just had a company that just went public and your company is worth $8 billion, you could easily just push the flush button, sell off a bunch of shares, and go and pay off your legal debts and other things. You could do that. That would hurt you as an investor. If you want an example of how this looks, or does this actually happen in real life? Well, let's go back to Twitter. When Elon Musk was looking to buy Twitter and started to sell off shares of Tesla near the end of 2021, you can go back and check his tweets. He was talking about paying off bills. He was talking about, should I buy this for a tax bill, or should I sell for a tax bill? I want to go out and buy Twitter, talking about all this stuff and selling shares at a massive rate, and the stock started tanking at the end of 2021. Then he had all that money and then began to buy Twitter, and then we saw how that turned out. This is something that is a risk. Okay, will it happen? We don't know, but there is something that's a risk. Logically, if you're putting yourself in your shoes and you just come up on a company that has a major windfall, you might want to take some of that and pay off some of those bills if those bills come due and when those bills come due. Here's the thing though. There is what we call a lockup period. People who are CEOs, people who are, on the board of directors, they normally have to hold shares for a specific amount of time, which is what we talked about during the Reddit breakdown. Now, his lockup period is 6 months. However, there is a waiver that is possible if the board of directors does allow him to do that. So either in 6 months, he could hit that button and pay off a lot of these debts and tank the stock inadvertently or not, or he may have some sway on the board. I mean, who's going to say no, right? If you work at that company and he owns 60% of the company, are you really going to say no if he says, hey, I need to sell everything to pay off X, Y, and Z? That's a question. That is a risk that you do have should you invest in a company like this. And it's not a risk that necessarily exists in a whole bunch of other places. The last thing that I'll bring up is this. Every company, when they file to go public, does have to list what their risks are. What's going on? What's the worst thing that can happen? And this one stood out to me. Now, to be fair, I have covered IPOs on this channel for years. And you guys know I read the risks for everybody. Go back and compare to what this is about to say. Okay, so they, again, every company does this. They put out the risk in their filing, and here's what stood out to me. Okay, the TMTG, Trump Media and Technology Group, expects to incur significant losses into the foreseeable future. There is limited operating history upon which to base any assumption as to the likelihood that TMTG will prove successful, and TMGT may never generate significant operating revenues to achieve profitable operations. If TMTG is unsuccessful in addressing these risks, the business will most likely fail. They said that, not me, okay? They say that they are going to incur significant losses for the foreseeable future. They think it is likely to fail. That should tell you whether or not you should invest in a company like that, whether it has a presidential name attached to it or not. But what are companies that are actually worth buying that can make you some money? I would humbly submit to you that Chipotle might be on that list. If you want to learn why Chipotle should be on your watch list and perhaps on the menu, you want to check out this video here.